If you take $1 billion and you buy money markets with it, they yield 2% or 3% after tax. And if the S&P is generating 14%, then you've underperformed the cost of capital by 11%. Therefore, your treasury is a cost center, not a profit center for the shareholders. And so what happens is that it shrivels up. The company basically decapitalizes the balance sheet and they give all the money away. And that, it just describes in a nutshell every well-run company in the United States, right? Except Berkshire Hathaway. Everywhere else, like all the Mag 7, what they do is they defund the treasury. So if you're one of those companies, you could just replace money markets with Bitcoin. Instead, Bitcoin is 50%, or let's say a reasonable 20-year forecast is 30% if you're a believer, 20% if you're an investor, 10% if you're a skeptic, right? But whether it's 10 or 20 or 30%, they're all better than 2% or 3%, which is the status quo, right? So if you're in the 20 or 30% camp, it outperforms the hurdle rate, which is the S&P index. And so at that point, the treasury in the balance sheet becomes profit center, which means you would stop paying dividends, you would stop doing buybacks, you would roll it into Bitcoin, and the company's market cap would grow faster and the stock would grow faster. Way to create shareholder value. You won't be better than us. You won't be better than a pure play treasury company, but you'll be better than your peers. Like if you're a native business or your organic business is growing 10%, you'll grow. If every other retailer is losing money, you'll make money.